Did someone just call your DTI and told you you couldn't buy a home because of it? Well, let's talk about what in the world is a DTI in the first place and how we can help you resolve it so that you could buy your home. In a previous video, we went over what DTI is and how it's calculated. But now we want to take you into understanding what type of DTI lenders are looking for and how you may improve your DTI in order to help you give you more options and better ones when shopping for a home loan. So as we have seen already, DTI or debt to income ratio is a formula that lenders will use in order to assess the risk they run in you being able to carry out paying the mortgage or the money they're lending you for your mortgage, in addition to all the other debts that you already currently carry. Now, when it comes to the amount of DTI that'll help you qualify for a home loan, this number will differ based on the loan program you're seeking. For example, FHA versus VA versus conventional will each carry their own DTI. However, as a rule of thumb, what we have seen is that a safety margin is for you to stay under a 43% DTI. Now, of course, the lower your DTI is, the better options or chances you will have of obtaining a home loan and of getting a better interest rates, thereby helping you reduce your monthly mortgage payment. So now, having stated that, let's go over the points that will help you reduce your DTI. So the name of the game is to help you reduce your monthly outgoing debt. And in order to do so, let's go over point number one. If we were able to condense multiple loans that you have out there and thereby reduce the monthly minimum payment that are due to all of those into one lower payment, this will in turn help you reduce your DTI. So for example, if I was to have a $2,000 debt that I'm paying $150 a month to, a $4,000 debt that I'm paying another $200 to, and another $6,000 debt that I'm paying $250 into. Well, if I'm able to condense all of those into one single account and thereby reduce the monthly minimum payment so that now instead of paying $150, $200, $250, now I'm only paying a payment of, let's say, $300. Well, that's still comparatively low to what I was paying to all those individual debts before. Thereby, I have just reduced my monthly minimum debt. This is the fastest way to help you condense that monthly DTI. Now, once you have figured out how to condense different monthly payments that are outgoing, the next step will be step number 2. Start tackling the highest monthly payment you have. Don't focus on the balances. Focus on the higher monthly payments you have. So for example, if you have 2 different credit cards, but one is having you pay $300 versus the other one that it's only having you pay $150, probably because of the interest rates that you have on each, I would prefer for you to pay down the $300 monthly payment over that $150 monthly payment so that we could get rid of the higher payment and again help you lower your DTI. So now let's go over point number 3, and that is to help you obtain savings that you may already have or even seller credits towards paying you down debt instead of using it for your home purchase. What do I mean by that? Let's take this example. Let's say you had a $5,000 debt that you still have on a car payment, and that car payment is costing you $500 a month. Now, I have a lot of people telling me, hey Rose, I want to put a higher down payment towards the purchase of my home because that'll in turn help me lower my mortgage payment. Well, if you were to put that $5,000 towards your down payment, that may only reduce your mortgage payment by about $30. Whereas if instead we reduce your $5,000 car debt, now you're saving $500 a month, thereby reducing your DTI and potentially even helping you get a better interest rates, thereby also reducing your monthly mortgage payment. So now let's go over point number 4, which is to help you bring in more income into your application. Now you could do so by adding a co-borrower. Now, if you're bringing in the income of a co-borrower, you're increasing your income to the debt ratio you used to have. This would be the fastest way to help you decrease your DTI and help you qualify for your home loan. Now, if that's not an option, you may also add hours to your current work schedule so that the lender is able to average out a higher yearly pay for you over the last few years that they're considering. If this is not an option, The other thing you may be able to do is acquire a part-time job. Now with this strategy, however, you may have to wait anywhere between 18 months to 24 months in order for the lender to be able to consider that new income as stable income. So I hope these tips will help you decrease your DTI and get you on the pathway to helping you own your own home. Now for more tips and ideas, make sure you subscribe to all of our social media channels, visit our website, or give us a call today for a free orientation. Until next time, this is Rosa Karp with the Karp Realty Group, where we help people build wealth through real estate. For more real estate news or tips, please follow us on YouTube or any of our social media channels. This is Rosa Karp with the Karp Realty Group, where we help you build wealth through real estate.